Hey everybody, welcome back to another episode of Docs Investing RX. I do apologize. It has been a while since my last episode, and been just super busy. The markets have been extremely volatile, and I work very hard to stay on top of the market pulse. I've been running the clinic, which is my investment group. Again, all profits are donated, so it's purely for the benefit of the community and membership. If you are interested, it's theinvestingclinic.com. But I've been putting in a lot of work there for providing educational material. I got the modules on there to help any investor, whether you're just starting out or you have some experience, to learn and grow and develop your skills. I also have the Discord as part of the clinic, which is a place for sharing ideas and market news. And I do share the trades that I'm currently doing. Um, with that said, if you guys are on Twitter, you can follow me on OG Hollywood, and I appreciate all your support, and I will keep trying to make good content for everybody out there, and hopefully I can continue making podcasts. Now, I've been waiting for my buddy Pablo, who was on episode 1, if you remember. Um, I'm not much of a talker individually, so I always like having guests on my podcast, so that way I can just chat with them and talk about different topics that hopefully you guys find interesting. Now, if you guys have any feedback, feel free to email me at og.hollywood@gmail.com. And I'm sure you guys have all been watching. These markets have been extremely volatile, and sadly, that is the new normal. We're always one tweet away from Trump or from, these different excursions that we have been doing as a country. And the goal is for most people is to just stay patient and consider a broad index fund because the market is cyclical. And what that means is that the market will take money from one sector that maybe is doing really well, take some profits, and then take that to another sector that maybe is lagging behind. And it continues to do that. And it's been doing that for decades and decades. So, with that, and also the volatility of the energy crisis happening in the Middle East, right? And that's affecting our strategic oil reserves here in the US. We have midterm elections coming up, and our country is running very low on missiles and defense despite a $1 trillion budget. These are all different factors that are affecting our inflation numbers, which again affects interest rates, which affects the debt that these companies can take out, especially growth companies. So again, unless you're able to pivot or stay patient, a broad index ETF will just keep your ship right and just write it all out and check back in 10 years. So for some of us, we enjoy trading. We enjoy watching the markets and pivoting and so forth. Me personally, I'm very pro AI. Have a sizable position in AI infrastructure. I have some speculative positions in the future of robotics and quantum space. So, in addition to my standard safe portfolio, it's always nice to have a little bit of a speculative position. Personally, again, for most people, that's just a lot to manage. And unless you're keeping your finger on the pulse, just consider broad index ETF. Stay diverse, stay balanced. As you can see, this volatility, it's the new normal. I feel really bad for those that are just new to the market and stepping into this. This is not what the markets have been like. You would expect maybe a fluctuation of a fraction of a percent, but we've seen greater than 1% moves in these index funds. That is just very atypical to see multiple moves of that magnitude. And if you're in Korea, I feel really bad for you to see 5% fluctuations on the daily and getting your index halted multiple times. This is just extraordinary times that we're living in. A lot of it has been due to leverage, right? We have over 500 leveraged funds now compared to just a fraction of that just a couple years ago. And the leverage itself is just making things even more volatile because it causes portfolios to swing in larger moves in both directions. And then it also induces margin calls. And as we've heard, or maybe you haven't, but these folks in South Korea are highly leveraged. In fact, there's talks of cashing out insurance policies just to go all in. And of course, if the market starts tanking, people lose money. And if you're leveraged, you lose a lot of money very quickly. And then the bank comes knocking, and sure enough, there's your margin call. And what a margin call is basically since you're borrowing on credit, the bank wants their money and you have to sell at a loss, which further accelerates the sell off in the market. Now, as investors, I just want everyone to kind of consider what your individual situation is. Now, I mentioned my portfolio. I do have a little bit more risk, but that again is a smaller position of my overall portfolio that's very diverse across both stocks as well as outside stocks and things like real estate, etc. Uh, Personally, I'm not much of a crypto person, so I can't really comment on that itself. But stocks and real estate have been historically very solid investments. Now I'm just gonna take a moment to check on my friend Pablo. Second,
I just don't have video on this computer, but that's okay. I think it just goes to pod audio anyway, so
yeah, potentially. I was hoping to share our faces with the audience there.
no, we're not.
All right, Pablo, how you doing?
I'm good, man. I'm just checking out the market on this Friday morning.
So, how's your portfolio been doing? You doing well?
Yeah, man. I'm overall been pretty good. I've been pretty conservative on buying. Haven't been buying too much. Mostly been just staying in cash with holding off new purchases, but I haven't sold a single share of anything. I've just been more kind of more hesitant to purchase and deploy new funds. Besides the recent purchase I made this week.
How does an investor, I mean, there's a lot of retail investors out there, and so how does somebody navigate a market like this? What do you recommend for somebody that's maybe just starting out?
Probably just write down a plan um, of what your goals are and work backwards. So if you say like, okay, I have a little bit of extra money, I've saved some cash, I have like my emergency fund. Okay, now I want to start investing in the market. I would probably recommend um, creating a strong foundation first before you do any individual names. I would just choose the index, and the index doesn't really matter. Really, honestly, I'm a believer it doesn't really matter when you buy. Obviously, there's more opportune times to buy, but you're buying a plethora of stocks, so you can be a little more willing to make those purchases. So I would just say start off with the old DCA to decide if you want to do bi-monthly purchases or whatever. Like, hey, every Friday I'm gonna buy $1,000 of VOO. Then just do that. And then once you have a foundation of that, I would say you can start doing some research in individual names, and then pretty much go from there. And with individual names, that's a whole nother game, right? So that's where it becomes kind of more of a job in some ways because you have to know what you own. Um, and I would say I actually had a really great conversation with another fellow professional. He's an orthodontist and he's a very wise man. He's made some very smart investments over time. He's loves technology and he loves the markets and investing. He's a Bitcoin maniac and he loves, he's a true technologist. And he said that what he would like to do is write down before he purchases, he writes down what he's buying, so he understands what he's buying, and then he writes down what would make him buy more and what would make him sell.
So this is more of a mental exercise in a sense of understanding what your plan is on the stock, right?
He
To
doesn't panic whenever the market changes. He doesn't like view it as a scary situation because the market's going to go down. Like if you're investing in high beta growth stocks, you have to like withstand volatility as we just saw with Leopold. I don't think he fully understood the risks of the leverage he was taking. And that's why he has he lost 35 billion dollars for the investors that were invested in his fund. He got to collect his fee, but
yeah, I mean, it's unfortunate that, again, maybe it's part of due to age. I mean, he is a brilliant person, and being 25 years old and not really having a sense of a market drawdown, and this would be an experience, and it's a learning point, right, for every investor. And it sounds like he's not completely out of the game. It sounds like he sold his public portfolio, but he still has some private investments. Um, but we'll see. I think he's going to come out stronger, and I'm very interested in his investment strategy. Again, he is brilliant, so he's done some great things, and he made a mistake, and that's okay.
totally. But he also did just buy, he bought like the right stocks, which is one of the, that's the hard part to identify what is going to go up before kind of anyone else did. But the other hard part is knowing how to respect the leverage. So I think
What about
that's the
yourself? Are
thing, right?
you a pro leverage kind of
I
guy?
mean, not for beginners. Leverage is something you have to be very respectful of because it will rip your face off if you let it.
Yeah, so
I would
I
say
agree with
no.
that. It's just like credit cards, right? I mean, ideally, you want to be paying the bill at the end of the month. You don't want to be carrying a balance. Now, again, anytime you use margin, right, you're paying an interest on it on top of everything else. And so when you're leveraging, you're essentially using credit. And like I said, unless you have a clear plan and clear safety behind it, then it is a very risky strategy because next thing you know, your credit card, you know, payment is due and you have to start selling things at a loss.
Yeah, I mean, I just look at what Warren Buffett says. I would say just listen to the king and respect what the king has to say, right? He's the greatest long-term investor, the longest to have done it for many years, right? So he's got more experience than anyone. And what's he say? He cautions against leverage. People, everyone thinks they're a genius in a bull market. We've been in a very long duration bull market now. Um, right? So like everyone thinks they're a genius during these times, and that's when people get complacent and they get their faces ripped off, and now this is when it's not so fun. So we had a mild drawdown, literally. What did the index go down in the last 2 weeks, and then
It
now
was
it's up?
about right, and we had to draw down. I mean, it was close to correction territory and about 10%, at least on the Qs. I think the SPY and the broader index, which tends to do better, right? Especially at something like an equal weight index, where every company has an equal share of the full pie, right? So the S&P, right? The SPY is the 500 companies, but it's weighted, right? The bigger companies have more percent of the overall versus equal weight, where each company has, you know, 0.2% of the whole fund, right?
Mm-hmm. So
Yeah, and even right now, as the market is sort of on all-time highs, if you are into tech and some of these other plays, you are actually a little behind because of the cyclicality of the market, right? Where some of the money has moved around to these other sectors. And you see something like oil, which was literally taken for dead, yeah, yeah, just a year ago. And yet here we are where oil is back front and center as we are facing a crisis with our strategic oil reserves, right? We got went into Venezuela, got oil there. We're battling for the Strait of Hormuz now. After it got because we got it shut down, and now the world's energy is on the verge of collapse. And again, the oil companies, those guys are able to jack the prices up, and they're making more money, and those companies are actually looking pretty good right now.
How does that make you feel as a consumer when you know like oil companies are able to profit on this, but you know, how does it make you feel as a consumer when you're paying more for groceries because of oil and
No, I agree. I mean, I think that it comes down to the fact that we are pretty powerless as consumers, right? You're doing your job, you go to work, you're providing for your family, but these bills continue to accumulate. And that's why investing and being able to have your money grow is so critical, because the prices will continue to come up. Inflation is real, and it's over 2%. So that means every year your dollar drops 2%. So next year, my dollar is only going to be worth less than 98 cents.
right?
And the year after that, even less than that. So unless you are actively making money on your money through investments or what have you, then it's horrible. I
Yep.
mean, and I feel so bad because there's the majority of the population that is living paycheck to paycheck. They say that uh, it's almost 60% of the American population is living paycheck to paycheck.
Mm-hmm.
And that's crazy. Those people aren't going to be able to save. They're not going to be able to invest. And then next year, their groceries and their fuel and their housing, everything's going to be up in price. And their dollar that they maybe even managed to save is going to be worth less. It's a deadly cycle. It's horrible. It's only getting worse.
Well, yeah, I mean, it's only going to continue to get worse, and I think the biggest risk is the reserve currency, right? That's what this war now is becoming about, is the US defending that reserve currency, because if they can't defend this, we start losing more and more. What's going to happen to all these offshore dollars? Is it just going to return to the US, and we're going to have a tsunami of inflation? Because now, I mean, it's not going to happen overnight, but like over the next 10 to 15 years, I'm not so confident that the US can continue to hold the reserve currency. How do you feel about it?
Yeah, I think you're referring to the petrodollar. And
I
no,
am referring to the petrodollar. Yeah,
yeah, and no, it's a very valid argument because obviously Iran has been under sanctions and they have not been using the US dollar. However, the Gulf countries themselves have been, you know, selling their oil using the petrodollar. And again, this has may open the door for these countries, these Gulf countries, to leave OPEC and continue to, diversify away. Because look, again, we're supposed to be an ally, and we started a war, and then we let their countries get attacked, and we weren't able to defend them, and now we're basically in a very bad predicament, and it's a really bad sign for a country. I mean, besides like the inflation itself and the costs going up and inflation going out of control, our country on the world stage is just falling apart. Our reputation is getting tarnished, and it's ridiculous. And then on top of that, we continue to send, billions of dollars of welfare money to other countries instead of spending
totally.
it here locally. And it's just insane that this is the world we're living in. I mean, we're supposed to be the greatest country on earth, and every day it's like we're slowly falling apart from the inside out.
What are your thoughts on the recent election, the Democratic Senate seat election? I feel like there's a bit of a tide turning because now you see more candidates getting more popularity by running against some of these super PACs and rejecting super PAC money, rejecting sending money to other countries. What are your thoughts?
Right, no, so you bring up a very important point, and Americans are waking up to the fact that our country is needing a change, right? This path that we've been going on for the past several decades is just not working. Inflation, again, that 2+% every year is not it's not keeping up with the patient like everyone's lifestyle, right? Their growth, their need to cover all the basic necessities. And again, I mean, I'm pointing to the fact that over half the country is living paycheck to paycheck is insane. And that's what we're going to be seeing in the elections. The problem is there's a lot of propaganda and fear, right? Oh, if you vote for these guys, yeah, they're saying they're for the people, but they're going to be bringing in all this, bad things into your lives. And if you really think about it, you got to cut through the propaganda. And we've seen this with the markets, right? We've seen guys like Bill Ackman go on national television and call for a market crash when he himself has a short position. So it's to his benefit to cause the markets to crash. And then he profits on it as the markets crash, cashes out, and then, you know, plays the other side and makes money going back the other way. And there's people making a lot of money off of the backs of Americans. And when they start waking up to the fact and cut through the noise and say, you know what, I'm going to vote for somebody that is going to represent me and is going to take care of my needs and not some corporate interest, not some foreign government interest, not the interest of billionaires. And I understand why people voted for Donald Trump, but the guy's he was born rich. He's a billionaire. He
Right.
has no idea. He has no idea what it's like to struggle. Right? He's never lived paycheck to paycheck, right? He doesn't know that which gas station has the cheapest gas or which generic store brand to buy over the name brand, right? He doesn't know any of these struggles, right? And so I understand it's like, hey, I voted for this guy because I thought he was going to be someone different than these other politicians, but in the end, it's just more badness. And maybe a different kind of badness than the usual politicians, but
Well,
it's still
the
badness.
what's something that this war has accomplished? This Iran war seems pretty meaningless. A lot of Americans, I think, are confused why we're in this war. Um, but it's gotten us to stop talking about Epstein, you know? So it's like,
Interesting. So yeah, I mean that's good. You bring up a good point, and distraction techniques. I mean, that's actually a good point because the Epstein files have been sort of pushed to the back burner, and every time it comes to the forefront, you're right. Something else comes up, and we keep getting distracted. And it's incredible if you just kind of follow the trail. Even the latest news of bodies being found near the ranch, and Trump and had the attorney general kind of shut down the investigation. It's just very odd, man. I'm just telling you, there's a lot of odd things that are happening in this country and around the world, and things don't add up. And again, I think it's important for every American and every world citizen to just kind of wake up, open your eyes, and cut through the noise.
mhm, yeah, sure.
But it's scary. It is a very scary place. I'll tell you that. I mean, I honestly think that it's to the point where if you don't do the X, Y, and Z, then we will like kill you and your family, right?
Oh, I
And I
think
think
that's
that's
happening
how
to politicians. I think that these politicians are getting, I think people are like becoming aware of it because they're like, wait, this person just changed their stance. Like even Donald Trump, if you look at Donald Trump from 2016, his first time running in 2016, his tone has changed. The man
yeah,
is different. Like
that's true.
2016 Trump, he was against everything he's doing now, which makes me think that his mind has been changed and he's been coerced. He's been I don't know. I don't know that. I'm just speculating. I mean, I don't
I
know.
mean,
But
no, I mean that's very reasonable because there's like you said, there's a lot of people out there that, will talk a certain way, and then, their face turns into sort of this, like, look of like a zombie and shock and just saying words that they're trying to appease, but maybe not believe themselves.
I mean, I wish we
So
didn't have to talk about politics when we're just trying to talk about the market. But the thing is that one tweet changes the market, right? So it is. We have to follow what our president's saying. We have to be aware of the geopolitical scope when we're investing in markets. If you're an investor, you don't really need to. You can just buy the S&P, and I would say most people shouldn't even worry about it. They should just buy the S&P. If you're interested in the markets in more of an individualized way, you're going to have more stress, probably better returns, but it's not free. You pay for those returns with volatility. You have to be able to have an iron gut. You got to be able to be not married to your positions. You got to be willing to sell if the narrative changes. I'll give you a good example. I was a big holder of the trade desk stock. I think I started buying at $35 a share in 2021, and I had rode that stock all the way up to 130, and I remember I was like, man, this thing's going to 150, and I ended up selling for like $75 a share. I sold my whole position because they missed one earnings. They got an absolute smack in the face. And I was like, whoa, like the narrative's changed. I'm gonna sell and I'm gonna sit on the sidelines, and if it changes for the positive, I will re-enter. I'm okay to re-enter even at a little higher. I had such a low cost basis. I was like, you know what? It's okay. Like if it's a good investment, it's a good investment. Today it hit 1250 at
I
one
think
point.
that's the key point that you brought up, Pablo, is that if you're going to invest in individual companies, you have to stay on top of them. You have to follow their earnings report. You have to see where they're going. Because as a shareholder, right, you are literally an owner of this company. And so if your company is not performing, do you still want to be an owner of that company? If the guidance is not where you want it to be guided, is that somewhere you want to be? And that's a great example that you brought up.
You just have to be willing to be nimble, especially in the market, the way technology's changing. Tech's changing so rapidly now, you have to stay nimble. You have to be willing to change your stance and your thesis. You can't have a 5 year hold. You can't just buy and say set it and forget it for 5 years now. You just really have to be willing to, if the narrative changes, you have to be willing to get out, because the only thing that matters at the end of the day is you taking care of your family, and that's your responsibility. You have to take care of
Ex-
your family and your checkbook. You
oh,
have to be able to pay
100%.
your bills. So that's kind of that's how my mindset shifted when it comes to the market. But
I mean,
um,
bringing up the politics again, I mean, that's exactly it. You cannot count on this government, right, or government in general to take care of you. You have to learn to take care of yourself. And so even if you're struggling with bills and whatnot, it's just you're going to have to take either more side hustles, you're going to have to cut cost, whatever it is, but you can't count on the government to help you,
no,
get out
no,
of
you
it, get out of
can't.
the hole.
You gotta. I unfortunately, the only way to win is one, be invested. Two, you have to make your money has to be working for you at all times. You have to I mean, you and I differ in investing styles. I like to have a large cash holding at all times, um, so I can pounce on opportunity. I buy all the time, but I always have a large cash surplus. I keep my expenses reasonable. I don't. I mean, I prioritize travel and I prioritize experiences, but I'm not. I try to keep everything else. I drive a very modest car. I rent an apartment. Um, I'm not going to gain wealth from I know that I'm not going to gain wealth from buying an expensive home, um, and having the maintenance costs. The up ongoing maintenance costs and ongoing property taxes of a home are a wealth destroyer. So my thought is stay in an apartment, um, that's nice, gives me flexibility, but it allows me to stack cash. But um, Doc, this was a great chat. I think we've given a lot of different digestion points to the listeners today. Unfortunately, I have an appointment I got to run to, but this was really nice.
Appreciate your time, Pablo. Yeah, no, it was good to catch up, and thank you again for joining us on the podcast. I want to reiterate the point that I just spoke to Pablo about really taking the initiative. It's a lot of work. It's very difficult when you are struggling to make ends meet, but it really comes down to sitting down and understanding your budget, where the money's coming in and where the money's going, and seeing where you can take cuts. Sometimes you may have to make hard decisions. You may have to decide to take on some side hustle. You may have to, do yard sales. You may have to bring in a roommate to help pay the rent. But whatever it takes, you do what you got to do to survive and hopefully build yourself out. You got to pay off all your debts and just tackle one at a time. It may feel like you're not going anywhere, but you have to do it. It's Life is so difficult at times, but once you get the ball rolling, it does get easier. And I've been there. I've understood, uh, you know, when layoffs happen, brought in a roommate and it was not pleasant, but we did what we had to do to survive. And again, I know it's hard and I ask everyone to, whether you're working or if you're an investor and you're a retail investor, is to just, be patient. Don't get emotional. You have to be very surgical. You have to be very strategic on all of your moves. Your If you're investing, you're buying companies, you're and buying ownership of a company, and that's your company. Make sure that's a company that you enjoy, that you appreciate, that you understand where that money's going, where that guidance is going, where that growth is going. If that company is not performing, is that a company that you still want to be a part of? Now, again, I have personal experience with some companies that, for example, Marvell. Marvell started pulling back from 120 bucks. It was down to 90. And I was like, well, this company is incredible. I started a position. I went down to $75. I bought more. Now, that's not true of all companies, but the guidance and the growth of this company and the trajectory was there. And because of the studying I did, I became a heavy investor. I shared, my studies with people on the clinic, with my trading group, et cetera. And now Marvell's at $200. But there's several examples, like Pablo explained, of like trading desk, which continues to free fall because the guidance and the growth is just not there. So I want everyone to just, you know, really consider and just be careful about every single dollar, about where it's going, how it's being spent. And honestly, like, I still remember my mom, like, we would, instead of taking the bus for 50 cents, we would walk everywhere, as little kids, just to save that money. And every little bit helps. And I hope the very best for everyone out there. This is just, a lot to take in and it's emotional and it's hard, but you have to take it out. You have to take those emotions out. And I know you guys can do it. We're going to do it together. If you guys ever have any ideas or suggestions and topics you want me to discuss, please email me ogdochollywood@gmail.com. Again, it's always a pleasure. I love the community. I love humanity. We have to help each other. Again, if we don't help each other, who else will? All right. This is Doc. Take care. Have a good one.